first option here is the option that would allow us the highest LTV while using short-term rental income. Uh, Typically, I wouldn't say typically, but you do face a scenario when using short-term rental income, depending which option you're selecting, of a potential either a 5% LTV reduction or a maximum LTV that is possible under that program option, whichever you may be considering, when using short term rental income. So that is why it's so important. You review the guidelines carefully to see if there is any type of an LTV adjustment or LTV limitation when using short term rental. So in this scenario here, this is a scenario where we will be able to obtain the highest loan to value while using Air DNA comps. Now, Air DNA is the most favorable one when trying to capture the greatest income because you do not have to rely on short-term revenue rental reports that may not be available. So in this case, however, there is a 5% LTV hit. So this option, which is normally an 85% LTV DSCR loan, then with the 5% LTV adjustment would be an 80% loan using AirDNA, which is going to be the maximum for AirDNA because in every other example that is an 80% loan max, there's going to be either a 5% adjustment or a 75% max LTV when using AirDNA. So keep in mind, this is the 85% LTV rates. So just because they drop it to 80% doesn't mean that you're going to get a better rate. They're going to hit you with the 85% rate. So here you're looking at 9.75 being your lowest cost option, and you can buy it down to 8.75%. And again, the benefit to this option is if you absolutely want to or need to, for whatever reason, use AirDNA because you want to get 80% LTV, short-term rental revenue reports may not be available or just won't do it for you, this would be the option for max LTV.